Are you wanting to buy a house but don't know if your credit score is good enough to get a loan? What is considered a good credit score, and what is the minimum score that you need to get a loan? Hi, my name is Tanika. I am an associate broker with eXp Realty. And if you want to get a low mortgage interest rate, you'll want to have a good credit score. Achieving good credit can take years, but there are a few steps that you can take to give your score a little boost. I will go over some tips that can help you quickly raise your credit score so that you can be on your way to buying your new home. Number one, the first thing you want to do is get a copy of your credit report. There are a lot of websites that you can get your credit score from, such as Credit Karma, and I recommend a website called annualcreditreport.com, as you can get one free credit report a year. Only do this once. It's called a soft pull, and you will not be affected by your credit score at all as long as you do this once a year. So you're going to want to review your credit report to make sure everything is accurate. Sometimes banks make reporting errors that hurt your credit score. Even if you haven't missed a payment, many consumers overlook the benefits of periodically reviewing your credit report. Now, if you do find any errors on your credit report, you're going to need to file a dispute. Number two is to pay your credit card on time every month. 35% of your credit score goes towards your payment history. So once you pay that card off, don't close it, because 15% of your credit score goes towards the length of your credit. Instead of closing your credit card out, make occasional purchases to keep that active. When you keep your card active, banks are less likely to reduce your credit limit or close your card. A credit line decrease impacts your credit score, or it may close it as well. A credit line decrease impacts your utilization ratio. You want to maintain your credit history so that your credit score will continue to improve. Number three is credit utilization. Credit utilization makes up 30% of your score. What is credit utilization? Simply put, this means that it's what you use versus what you have available. It is calculated by how much credit you are using divided by the total amount of the credit that you have access to. So let's say if you charge $10,000 of your credit on a credit card that has $50,000, your utilization is 20%. Most experts recommend that you keep your overall utilization below 30%. Low credit utilization rates suggest that the creditors that you can use your credit responsibly without relying on a heavy amount of it. So you want to keep it low. Now, if you're paying down your credit cards is not something that you can do right now, you can request a credit limit increase. By increasing your credit limit, your utilization will lower. Number four is your payment history is the most influential credit score factor. It makes up 35% of your credit score. Make your payments on time. If you have any late payments, you can call the credit card companies and see if there's any way that they will remove that late payment for you. Sometimes credit card companies will do this, especially if you only have at least one late payment and you have a history of paying your bills on time. So even if you can only make the minimum amount of payment on your account to remain in good standings, and you will not be dinged for having any late payments. Number five is the age over credit limit. The lenders are looking at consistency. Add yourself as an authorized user to someone who has really good credit score, like a family member with a high credit score than yours. You can actually add yourself as to their card as an authorized user. Doing this so that you can positively affect your credit score when the credit has like a long-term account and ongoing payments and low utilization. This is a quick fix to get what you need, not a permanent thing. Number six is to have a variety of credit accounts. 15% of your credit score is what type of credit you have. Having a variety of credit accounts can demonstrate that you can manage your credit responsibly. You might have like one credit card, a home mortgage, a car loan. Each type of account has a benefit to your score. I hope that these tips will help you raise your credit score just a little bit more. And if you have any questions about these steps, please give me a call and reach out. Follow me for more tips on real estate and credit.